Hey everyone, thanks for checking out this video. My name is Travis. I'm the creator of the Master the Market education that you can find linked below in the description. And I wanted to make a quick video to go over some ways that you can actually improve your trading accuracy. And by doing so, it's going to help you, of course, improve your overall profitability in the market as well. So first and foremost, tracking your trade data is something that is going to help you find your niche in the market. And once you know what your niche is and you know which trading strategies work best for you, you can then focus solely on those trading strategies, cut out the ones that don't work very well for you, and by doing so, that's going to increase your accuracy. So one thing that I do want to note is that when you're new to trading and you don't necessarily know which trading strategy works best for you yet, it's very important at that time to trade with small positions, because if you don't and you're trading with, a majority of your account or even your entire account like many new traders do, there's a good chance in that case that you're going to blow your entire account before you even find out which trading strategy you should be focusing on and which one is working best for you. So anyway, with that being said, I'm going to go over some things that I like to keep track of when I'm keeping track of my trading data. And then I'm going to show you some examples here in just a minute to explain exactly how this is going to help you find which trading strategy works best for you and how you can use that information to improve your trading accuracy. So the first thing is the max drawdown. A max drawdown is basically the max loss that you held through while you were holding a position. So for example, if you were to buy a stock at, let's say, $1 per share, and then you sold it at $1.20 per share, obviously in that case you made 20 cents per share or a 20% return. But let's say for this example, the stock first fell down to 90 cents per share before you were able to sell. And in that case, that means you held through a 10 cents pullback or a 10% drawdown before the stock started to bounce and before you exited out at 120. So keeping track of your max drawdown on each trade is going to tell you how much of a loss you typically hold through on each of your positions. And that can be very helpful because if you see that you're regularly holding through, a 5, 10, 15% drawdown on each of your trades before it starts to go in your favor or before you exit out of the position, you know that you may want to start being a little bit more patient with your entries so that way you don't have to hold through those drawdowns before your trade becomes profitable. Okay, with that being said, the next thing that I keep track of is, of course, whether or not the trade was profitable. And this is just going to give you an idea of what your overall accuracy is with your trading, because without keeping track of that number, you're not going to know whether or not you're improving your accuracy. And obviously, since that is something that you want to improve on, it's important to know whether or not the adjustments you're making to your trading are actually showing in the results. So the next thing I track is the dollar return. And this is just the profit or loss in terms of dollars or money. And then, of course, we have the percent return, which is the total profit or loss in terms of percentage. And last but not least is the type of trade. And this is actually what's going to help you find your niche in the market and increase your overall accuracy by doing so. Now, of course, there are tons of different trade types. You could, of course, be buying a dip or a pullback. You could be buying into momentum. You could be buying a breakout. You could be short selling into resistance. You could be short selling a breakdown below support, and so on and so forth. And because of that, you should obviously have some trading strategies that you're already using. And when you start to track your trading data, it's important that you have those trading strategies in mind. So if I go over here to this example of some of the things that you want to track when you are tracking your trades, of course, we have the trade type over here as the last column. And the trade types that I have for this example are 1, buy at support, 2, buy the breakout, 3, short into resistance, 4, short support breakdown, and then I have 5 other. And if you were to put other, you would just put the type of trading strategy here in the notes. But in this case, there are 4 main strategies that I would be using for my trading. So when I'm keeping track of my trades, now by putting the trade type in with my data, I can see which trading strategies are working the best for me and which ones I've consistently taken losses with in the past. So in this case, strategy number 1, buy at support, you can see that 3 out of 3 trades in this example were profitable. We have one here for a $200 return, we have one here for a $90 return, and we have one here for a $110 return. Trading strategy number 2, which is buy the breakout, was only profitable 1 out of 3 times. Trading strategy number 3, which is short into resistance, was profitable on 3 out of 4 trades. And trading strategy number 4 was profitable again with just 1 out of 3 trades. So if you're looking at this data and you're looking at your own trading strategies, in this case, you can pretty safely assume that trading strategy 2 and 4, because they were only profitable 1 out of 3 times, are not going to be your best trading strategies that you want to stick with in the future. So because of that, you can probably just cut those completely out of your trading and focus more on trading strategy number 1 and trading strategy number 3. And by doing that, you're going to be focusing on the trades that have consistently made you the most profits in the past, and you're going to be avoiding the ones that have consistently caused you the most losses. So for these examples, you can see over here in the P or L, that just means profit or loss. I use 1 for a profit and 0 for a loss. And that way, when you select the entire column, you can go down at the bottom and it's going to give you an average. In this case, we have a 61% accuracy. And because the overall accuracy in this case is 61%, we know that 1 divided by 3 is 33.3%. So for strategy 2 and strategy 4, the ones with 33.3% accuracy, obviously that is well below the overall accuracy of 61%. So by cutting out those two strategies in our trading, it's going to significantly increase our overall accuracy with our trading. And by doing so, it's going to increase our profitability in the market as well, assuming that you're keeping your risk management and everything else in order. Okay, so that's just a very quick and easy tip to keep track of your trades and use that information to actually improve your trading in the future. So I hope you found this video helpful, and if you enjoyed, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and lessons. And if you're interested in taking your education on day trading, swing trading, and even long-term investing to the next level, as well as gain access to our exclusive market resources in our trading chat room with over 1,000 active traders, all of that can be found at Master the Market, and that's going to be the first link down below in the description. Anyway, thanks again for watching. I hope you enjoyed, and good luck with your trading.